Ladies and gentlemen, it's Modern Investing on Pod TV. My name is Sasha Starr, and our guests today are Dr. Milan Somberg. Welcome to the show.
Delighted to be here. Thank you for inviting me.
My pleasure. And Jim Eid from Eid Foundation. Welcome to the show, Jim.
Hello, Sasha. Thanks for inviting me.
Yeah. So today is Wednesday. Everything's supposed to be up, but it's not. It's the only thing what is up is Nvidia, which was beaten the last couple of days. However, it's recovering today as the other markets are down approximately 1%, both Dow and S&P. And very interesting observation was on CNBC, Jim Cramer, when he was talking about NVIDIA. And what he said is, it was before the market opened, by the way. So everything looked down because of this 0.1% uptick in CPI numbers. And he was saying that people who bought Nvidia, some of them bought it maybe $200-300 a share, which is they're doing extremely well. There are some people who bought it at $950-960 a share. Those people are losing. Furthermore, I won't rule out, said Jim Cramer, that it could go down to $800 a share. So people will take substantial losses unless they understand what they bought. If they understand what they bought, then obviously it will help them. Now, if they sold covered calls, it will be even easier for them to see this mini correction or whatever it might be. But those people who don't understand what they bought and they didn't sell covered calls, then it might be painful. Not that NVIDIA will not recover sooner or later. The problem is that there could be margin calls, which will force them to sell at loss. So you always calculate this possibility. I belong to a camp that sold covered calls, decreased the position substantially. So at this moment, as we speak, I have only 200 shares with very deep covered calls sold. I remind you that we are talking about 960 December 20 calls. So there is by the time left, you can appreciate what kind of premium it was. It was $150 per call. So $15,000 for each call, which definitely can offset the probable downturn. So even if it will go below 800, I will be still break even. Now it will go down to 750 or lower. Then I think that the trading range where it has to find, in my opinion, it's between 750 and 950. 750 is support, although it hasn't been that low lately, but it could. And the resistance definitely is in 950. I would say short-term resistance, even way lower, it's probably 900 is resistance. So I would say a short-term, I would say 800 is support, 900 resistance. If you're taking longer time horizons, then it's maybe 750 to 950. So that's where we are. However, don't forget that there is a May 22nd, I believe, it's earning report. And you know what's happening with earnings on NVIDIA, and I don't see any reason why this earning report will not be as spectacular as ours, or maybe even more so. There are some indications. However, we'll see how it all plays out. Jim, how are you trading your position?
Well, I basically am still sitting on what I've been doing, unchanged. But my anger with the Fed is grown. I think the market is down today because what we had was a very positive jobs report, which means to the Fed, there's inflation. We might need to keep rates high. Now, back before 2020, they kept rates artificially low for far too long, and now they're keeping rates artificially high for far too long.
Agreed.
They need to reduce the rates, and they talked about doing it and made hints. But jobs reports like this spook them and keep them thinking that, oh, we can't lower interest rates now. And they're operating on an old thinking, an old philosophy. The inflation was caused by the global pandemic, COVID, and it was worldwide. It was not just the U.S. economy that suffered from it. So the inflation was not caused by the U.S. economy, and they haven't gotten this straight in their heads yet. So the U.S. economy is not the indicator that they need. What we needed was the restoration of the global distribution system, which we have gotten. Now, corporations are not going to lower prices because they found that customers will pay for them. So they're keeping prices high. So yes, prices of goods and services are higher than they were in 2020 when the pandemic hit. And they're not going to be lowered unless we have competition that comes in to supply it at a lower cost. But right now, with rates high, it's very hard to start up a business to compete. So if the Fed would just lower the interest rates, they would encourage businesses to start up and compete, and then we would see prices lowered. But with Fed keeping the interest rates artificially high, we cannot get the competition that we need in order to lower costs and lower inflation. So they're operating on this old mentality. If we keep it high, and what they're trying to do is produce artificially a recession where the jobs go down, where people, and then they'll think, okay, well, people won't spend so much and prices will come down. This is an outdated way of thinking compared to what is actually happening in the world, which is a breakdown of our global distribution system and a restoration of it. And they're not paying attention to that.
James,
So just lower interest rates, the economy would boom, continue to boom, and new competition would start up.
James, they notice, or they have to notice what's happening in the rest of the world. Where will interest rates be 6 months from now or a year from now?
Well, people around the world have been talking about lowering interest rates for quite some time. People have been reluctant to do so because the economy still seem to be doing well. But no economy is doing better than the U.S. economy.
Yeah.
The U.S. economy has been marvelous in its recovery from the COVID pandemic. And the only thing, the outlier now is inflation. And the Fed, if they would get out of the way, competition would start up and compete and force people to lower their prices. And as long as the Fed stays in the way with artificially high rates, they'll discourage businesses from starting up. And they may cause an artificial recession, and then people can lower interest rates. But the Fed has been a problem for a while now, keeping rates near zero for far too long, encouraging people to go into debt, and then now keeping them too high for far too long. So just go out on the Fed, get it straight.
The Canadian central banks are keeping interest rates the same. They haven't changed today. They announced today they're keeping them the same.
Right.
I'm
interested
to know your opinion on other programs here on POD TV. There is a discussion always comes to U.S. debt of $35 trillion, give or take. And of course, if the interest rates would be lower, it would be easier to service this debt. And it's all in the hands of the Feds. And for some reason, they don't want to budge here. Okay, that's fine. But now there is some interesting discussion we had the last couple of days on POD TV. I believe that the fixation of 2% inflation is a myth. I don't believe anytime soon there will be 2% inflation. It will be at least 3% or more. This is such an economic cycle. The inflation is there simply because as you mentioned, there is not enough competition. So let's see if a grocery store, and I ask Mark Lee, Mark, you are going to buy some groceries. How the U.S. debt of $35 trillion affects what you're paying for groceries? If it's going to be $34 trillion, would you pay less money for groceries? I don't believe so. Or if you go higher to $40 trillion, are you going to pay higher prices for groceries? No, I don't believe so, because let's understand how these prices for groceries are being formulated.
Sasha, who
Yeah.
benefits most from inflation? Borrowers do. And who is the biggest borrower on the planet? Yeah, the United States government. Is it in their interest to lower inflation when they benefit from it to such a significant extent? Yeah, it makes you think about that.
It's tough to say because although they're borrowing the money, they're issuing new debts. So they have to pay more interest, especially if interest rates are not going down. So I really don't see how they benefit. It's just the nature of U.S. economy, in my opinion, that the debt will go most likely higher in the next
Yeah.
2 3 years,
Borrowers,
and lower.
borrowers benefit from inflation because they return the money that they have borrowed, say $1,000. They return it a year, 5 years, 10 years later, but it buys less than it ever did before. So borrowers,
So how they benefit again?
they are returning a smaller amount than they borrowed. They borrowed $1,000. They return $1,000, but it's not the same $1,000. It's
Wait,
worth less.
wait a second. What about interest?
Yeah, they have to also return the interest, and
Interest.
that's what is discouraging startups right now. Startups are really the lifeblood of the economy,
Yeah.
and the way things are right now, it's discouraging, making it harder for startups to get started. So it's a serious problem, and I think that the Fed deficit, obviously the thing that really surprises me is that the government keeps going out and asking for more debt and issues more bonds, and there's always buyers. So
Always.
people are still buying that debt, and and it's one of those things, like as long as you could, like, it was like how Trump made his way in the world, was he would have debt, and then when it came time to repay it, he would borrow more from somebody else. And as long as you have someone buying, you can
At
keep
one
that
time,
thing going.
I remember at one time he had a name, the King of Debt.
Yeah.
Remember that was the case. So, in my opinion, coming back to the grocery store, so the grocery have to find a supplier of certain goods. Let's
Right.
see, potatoes, tomatoes, doesn't matter what. So they have numerous suppliers. They're trying to find the best as the prices, deliveries, and everything else. Okay, so finally they found suppliers that they are agreeable with, and now they are bringing them down as much as they can to get the best possible price, and then they jack the prices on consumer, like Mark, for example, so he will pay more money. So Mark also will try to see what other stores are offering. So there must be a competition. It's impossible. That's what I learned when I was still in the Soviet Union, when there is no competition and there is only one government store where you can buy bread and tomatoes and everything else, milk so much. And if there, you see, at that time, I remember very well that the prices were exactly the same in all stores because all stores had the same owner. So the prices were the same. It doesn't matter. You can buy it next door place or you can travel 30 miles away. Prices still were the same. Now, competition is very vital in this business, and only that can fix a problem with inflation or so on. And all this talking about U.S. deficit or budget deficit or the foreign debt of $35 trillion or so on, this is nothing but a talk. It cannot affect everyday's lives of American people, and this is complete waste of time.
One thing I keep hearing is the price of eggs. People are paying more for eggs, And what people don't understand is the same thing is they're not attributing to the global pandemic that we suffered and the breakdown of the global distribution. They don't understand that that's why we have inflation. They don't understand there was an avian flu. An avian flu made eggs more scarce, so the prices went up. And it wasn't a fundamental part of the U.S. economy. It wasn't a fundamental part of any presidential policy. It was just an avian flu that hit the industry hard and caused prices to go up. So people using that kind of thing as an example of bad policy are missing the boat entirely. I think most time intentionally so. They're just trying to make a point that's in their self-interest. They can't really believe that it's policy that's causing things like egg prices to go up.
Yeah, just really quickly, since I heard my name being mentioned and everything, one of the things I hear people talk about whenever there is inflation and all along those lines, and you kind of alluded to it, is this notion of the staples, because there's a lot of things that people think that they can't survive with. We know that even when there is a hurricane or some sort of life disaster or natural disaster, people will run to the store and get milk and get soup and things that they think that they need to survive. So that is one of the things that people talk about when they think about inflation, is the fact that if they are going to get their milk or their bread or some of the other what they consider life essentials, that the price is a little bit higher depending on what the market is doing. And like I said, I am not an economist or the financial planner like the three of you are and everything, but is that not a concern? Because I do know that that is something that just the common man, including the common man around Durham, will oftentimes tell me, is that they are hearing, like you just mentioned, Jim, that the eggs are not the same price that they used to be, or the loaf of bread is not the same price that it used to be, and therefore they are concerned about how it is impacting their personal pocketbook. Because that's something that every candidate talks about, is how will it impact your personal wallet and all in that space.
Yeah.
But your take.
Remember back in 2020, in the beginning of the pandemic, there was a run on toilet paper.
Mhm. Yep.
What did that have to do with anything? So we don't always act rationally. We pretend that we're rational human beings, but we don't always behave that way.
Canadian investors have another problem that American investors don't have, and that is they're not allowed to write cash cover puts in registered accounts. So I wrote a letter to our Minister of Finance. Let me see if I can dig it up. I said to her that if Canadian investors were allowed to write cash cover puts in registered accounts, their portfolios would grow and be bigger. And when they get to the point where they have to withdraw those from those portfolios as required by law, the government would get more money in taxation because the portfolios are bigger. And she replied, actually, that they will carefully consider my input in their programs. And so we might see a point in time where Canadian investors are allowed to write cash cover puts the way that the American investors can, because it makes a lot of sense, both from the point of view of the investor and the point of view of the government. Usually, major changes hurt somebody. There are lots of major changes which will always find somebody opposing them. But here's an example of a major change that would benefit everybody. So let's see if that happens to Canadian investors. I'd like to see that happen soon. Because right now, you can write cash cover puts in a margin account, which we discourage. A margin account is a way that investors can lose more than 100% of their money. Where else can you lose more than 100% of your money except in a margin account where you're allowed to write cash cover puts? So there you go.
But a margin account in this particular situation, actually in a lot of situations, but in this particular situation, that allows you to control more puts that you sold than if you wouldn't have margin account. So, and
That's right. Yeah.
The difference is great because let's see, if you take imagery portfolio, say $100,000, and you can sell without margin, you'll be lucky to sell maybe 1-2 puts, for example, on NVIDIA, if you really want to go into that.
Most investors, both in the United States and Canada, would have most of their investments in tax advantaged accounts. And only after those tax advantage accounts are totally filled up, only then does it make sense to open a margin account or any other type of account. So it doesn't really apply to most investors.
I don't know. I would disagree with this notion simply because tax protected tax advantages account, it defers taxes. It doesn't eliminate taxes.
Of course, yeah, of course.
It defers taxes. So if I'm making profit and I'm paying taxes now from the profit that I generated, that's just fine. It means that later on I will not.
But don't you agree, Sasha, that the later you pay your taxes, the better off you are?
Especially when you're starting out in life, saving in a tax deferred account makes a tremendous amount of sense. As you approach retirement age.
Yeah, but if it's not margin account, then you're losing all your leverage. You're not even close to achieve situation what, for example, I enjoy right now. Without margin account, I would not be nearly as high on my profits as I'm now. So I really don't know what are the tax advantages account.
Well, we're talking about people who don't have a love for investing, aren't want to.
Okay, that makes sense.
Yeah.
So so you can buy you can control actually three times lesser amount of shares without margin. That if you go with margin, you see with the margin with $100,000 or whatever. How many shares of NVIDIA you can buy? 80 shares.
Yeah, right.
And with margin account, you can buy around 300 shares.
Hey, Sasha and Jim, I would argue, and maybe y'all can correct me, that unfortunately, or fortunately, depending on your point of view, that a lot of people don't think about even their personal debt until probably about this time of the year, or maybe a little bit earlier, because they started thinking of what they have spent their money on. Because as we know, literally in about, I think it's 5 days, the 15th is the deadline for taxes and all along those lines. So it is the tax season when people start thinking about their personal debt, because I know that a lot of times people will be like, "Oh, wow, I didn't realize that I spent 25% of my money on eating out or going into luxury items and all in that space," but they don't think about it until they get to the tax season. So what do you think about that, Jim?
That's a great point, Mark. I think, we talk a lot about the national debt, but it's the individual debt that I think really people have control over. There's nothing I can do about the national debt, but my personal debt I can control. And I grew up, my dad taught me not to get into debt. I paid cash for my first car, for example. But when I bought my first home, I took out a mortgage. So, sometimes debt is very, very important, very, very useful, and very, in your best interest to do. But when you're spending more than you're making, you're going to get into trouble. Right. And this is the thing that people have to have self-discipline. I wish this was taught in elementary schools to allow people to have some sort of financial understanding of what debt can do to you. Debt can be crushing. And when you have to borrow in order to meet your rent, you're in trouble.
If you borrow to invest in an appreciating asset, such as, let's say, starting a business, that makes a lot of sense.
Sure.
But if you borrow to buy an automobile, which is the case with most automobiles, most automobiles on the road today are owned by the bank, and they're a quickly depreciating asset. The minute you drive it off,
the minute you buy it,
it loses 25%. Borrowing to buy a depreciating asset doesn't make any sense at all, and it's a very common situation.
But Milan, isn't that the common situation? Because don't most people, and correct me if I'm wrong, but I would say that there is a push in entrepreneurship that has been existing now for a number of years. We can argue that it is part of the American way. And I do have friends in the restaurant business as well as other businesses. I can't think of one of them that did not wind up borrowing in some form or fashion.
Well, you have to start a business
building in order to get the building or the entrepreneurship venture off the ground. They borrowed in one form or fashion.
To buy your home or start your business, that is essential. It's absolutely true. But to buy cars and then to turn the car in because the ashtrays got dirty or something like that, and this is not a wise way to spend your money.
Borrowing to take a holiday. Similarly, borrowing to take a holiday doesn't make any sense at all. and it happens a lot.
Yeah, just really quickly, and then we'll bounce off and everything. But to Sasha's question he asked earlier, I know a number of people will be trying to figure out how the national debt impacts their things that they love doing, whether that is going to a sporting event. And I know that there are a number of people that have certain brands of beer that they enjoy, and they might be trying to figure out how the national debt impacts that. And the only thing I can think of is that it might be impacting the cost. So if the national debt is impacting the business, then your cost of, let's just say, a Heineken, because that is an import beer, might not be the same as it would be in other situations. But that was
sorry, Mark, explain. What the price of Heineken to do with the national U.S. debt? Just explain it to me. I'm ready to look.
I don't see the correlation.
Well, the correlation I was making is that part of it is the business might make a decision to put up their prices based on the supply-demand chain. That's where I was going with that. The supply-demand chain.
But
Because
it's a
particular
different
beer
story.
comes from Holland, so
Wine
you have to get
is
it
one
from
thing.
here. You have to get it from Holland to the United States to the plant, and then from the plant to the other places. Because one of the things that we oftentimes hear the media talk about is the supply-demand chain, and all along those lines. So that's where I was going with that. Is that particular beer is coming from Holland, so you've got to get it shipped here. You've got to get it to the plant here, and then you've got to distribute it to the grocery store. All involved in the supply chain and everything. So that's where I was
What
going with
does it all have to do with U.S. debt? I'm getting lost. I don't.
Isn't it interesting that the U.S. debt, being what it is, a huge amount, everybody wants to be in the U.S. dollar. All money that's looking for someplace to be wants to be in the U.S. dollar.
Every time they issue bonds, there are people who buy them.
Yeah,
And that hasn't stopped.
And that's
So-
because the U.S. market is so strong
Yeah.
and so promising. And so, like I keep mentioning, empires have a 100% failure rate, but the failure of the American empire is nowhere in sight yet.
There are no signs of a recession unless the Fed keeps interest rates too high and artificially causes it. You know, people are getting more jobs. There's more jobs. Unemployment is 50-year record lows. The people are getting paid more money. The wages have gone up. You know, the corporations are still raking in record profits. There is nothing wrong with the U.S. economy. People keep thinking we're on the wrong path. There's something bad about the economy, and then they report, "Well, I'm doing okay." There's a disconnect out
correct me
there.
if I'm wrong, and maybe I can correct what I was thinking of, because I mentioned it to Sasha before. Part of what I hear people when they talk about the U.S. debt, they talk about the nature of us living in a global economy. If we live in a global economy, then what happens in the U.S. is kind of like that notion. What happens in the U.S. can impact other things, including our trade relationships. I mentioned earlier today on the news show that Japan is coming here to visit North Carolina. The Japan Prime Minister, he's obviously right down in D.C., but he's coming down here because there's a Honda plant that's here as well. So that's what I was going for, is that some of these conversations that are globally related, and that's even what I hear some of the economists talk about on the other networks and everything, is how they are related. So this global debt is part of the multinational corporations and part of the global relationship that we have and everything. So that is the argument that I hear people saying that Sasha is shaking his hand, so maybe he disagrees and everything.
Oh, Mark,
Right.
I disagree.
I disagree too. Yeah.
Here's why. What exactly is U.S. debt of $35 trillion? It's U.S. government borrowed by selling bonds and through other mechanisms, and it keeps growing from 10 trillion to 20 trillion. Trump added about 8.5 trillion, and so on and on. And it's growing higher and higher, and it will grow next year. It will grow in another trillion and a half.
And it doesn't matter who's president.
No.
Another interesting thing, though, is the Treasury's yield, two-year Treasury's yield now is at 4.7%, and 10 years is 4.3%. That is, the near-term Treasury yields are greater than long-term Treasury yields, which is an inverted yield curve.
Yeah,
And an inverted yield curve has predicted every recession in the last 50 years.
Okay. So now you're talking about, for example, things like Heineken beer.
Mhm.
How Heineken beer is related to U.S. debt? There is no relationship whatsoever. How Heineken beer is getting over here in North America? So the importer of beer, he negotiates prices with a Dutch producer, they have set prices, so they're buying at that prices, paying duties, bringing it, shipping it to United States. It's going to distribution centers, and it's going to Costco, it's going to Walmart, and all other stores. That all operations, there is a supply, there is a demand, there are several different stages which are not correlated to U.S. national debts whatsoever.
I
There is
don't think international trade is correlated to the debt either. I think the international trade is all about supply and demand, and I think that what we have been focusing on, since Nixon went to China, is the global building a global economy, and this global economy has made many countries and many more people wealthy in ways that we can't do if we're just isolated as a country. And there's always been a strong isolation movement in various countries. You see it in Italy, you see it in France, and you see it in the United States. You see, before World War II, we didn't want to get involved in a European war. It wasn't until we were attacked on Pearl Harbor that we got involved. And there's always been a strong isolation streak, which means we don't want immigrants. This is happening all across Europe. This is happening in the United States. We don't want people coming in, but we're a nation built on immigrants. They do jobs that we wouldn't otherwise do. They start businesses that we wouldn't otherwise start. These are the types of things that the isolationists have always, throughout history, been wrong. We can't do it alone. We must engage in trade with others.
And also, that reminds me about effect of immigration. One of the effect is many states now, they have minimum wage now. They raised it to $20 an hour.
Yes.
So McDonald's, where people are flipping hamburgers, and a couple of years ago they were getting maybe $7.50 or $8 an hour, they're now getting $20 an hour. Bring people from South America, Venezuelans, and others. They will do gladly the same job for $9-10 an hour instead of 20. So
California's economy is based on that.
Absolutely. So if you have enough supply of labor force, then the wages wouldn't grow that high. The inflation would be lower. And by the way, I still believe that one of the reasons that we still don't have inflation in North America is immigration. Because immigrants, when they're coming, whether they're coming illegal or legal, it doesn't matter. They all have to rent an apartment. They have to buy clothing. They have to buy food. They have to buy cars. They have to send children to school or so on. So that all positively, okay, there could be a cup of bad apples there, maybe a cup of drug dealers or killers or so, but there are enough of those in North America, people who are born here. There are enough idiots who are ganning school children or so on. So that's really, you can ignore that. Majority of the people, they are trying to build a better life. And
we have forgotten what the Statue of Liberty represents. Give us you're tired, you're poor, you're huddled masses. And these people are coming to escape situations that are dire, dangerous, and they're coming with hope in their hearts. And we ought not, as a country, turn our backs to them.
And
just really quickly, coming back to what you're saying, because I just looked it up, there are only a couple of countries in the world that have debt limitation laws in place. Apparently, the United States is one of them, and Denmark, ironically, is the other one. So, because I do hear this debt conversation isn't just a U.S. conversation and everything. So, are we thinking that we should have debt ceilings or is it, as Sasha is saying, maybe a moot conversation globally? Because apparently there are certain countries that have a ceiling as to what the debt can be. Like I said, the United States is supposed to have that, as is Denmark, but it is not just a U.S. issue, because I even hear people from other parts of the world. I'm fortunate to have friends from other parts of the world that are concerned about the debt in their country, whether it's Nigeria, whether it's Ghana, whether it's Latin America, or whether it's a number of other places. So should this be, as I think Sasha is alluding to, a non-issue in the not just the U.S. conversation, but in the global conversation?
Jim, would you like to address that?
Well, I do think that the national debt is a serious issue, and it has to be addressed in two ways. One is generate more revenue, and the other is spend less. But if you talk about generating revenue, there's an immediate non-starter. It's a third rail. That means more taxes.
More taxes.
And even though we have so much tax fraud, and we don't crack down on it when they're trying to eliminate the IRS agents who would help with the track down the tax fraud, and the wealthy is not paying their fair share. I mean, that's another third rail. You can't say that, but it's true. They employ people who help them avoid taxes. And
how would you spend less? What would you cut back on?
This is the question. You have to do both. And where would you spend less on? Now, I wouldn't say we spend less on the health of the citizens. And I would say let's take a hard look at the military. Some of the projects that we have that are okayed by Congress are, the senator can go home and brag about all the jobs that he's brought to this state. But they're making things that the military doesn't need. So take a hard look at these types of things and shut down these multi-million-dollar projects that produce things that we don't need.
James,
building shipyards, we could be using it much more sensibly. Go ahead.
The United States spends 5% of its GDP on the military.
Right.
That's all. So how much can you save there?
Well, it would be a significant, if you knocked it down to 4.5%, that's a lot of money.
Oh, you're right. You're right about that. Yeah.
So, how much do we spend on security in the sense of the police force? Because I do know that one of the conversations that has existed throughout the United States is the fact that a lot of the police force and the law enforcement has military style equipment and everything. So if that is a significantly more than 5%, that could be something that could be cut down, because I don't know that you need tanks in certain cities in order to maintain control in those cities and all along those lines. So that could be something that could be cut immediately, into your point, Jim, and everything.
But it doesn't really change the way I invest. However much the government debt is, it's not going to change at all the way I invest. Right now, I'm concentrating on artificial intelligence, companies that are going to benefit from that. NVIDIA, we've talked about. Taiwan Semiconductor Manufacturing is another. Marvel, MRVL, not the Avengers movie makers, but a semiconductor chip manufacturing. One of the things that the Biden administration did that was fantastic is pass both the Infrastructure Act and the CHIPS Act, which is allowing people to come in, like Taiwan Semiconductor is going to build a factory in Arizona so that we can have the ability to manufacture our own. This is a national security issue, and it's in our best interest, but it's also great investment opportunity. So this is the type of thing that I concentrate on, is when do these things influence my investment opportunities? And the national spending is not changing my perspective over that. But the government policy is helping these areas, which are vital to our survival, to be funded and to be started and to be developed. And that represents an investment opportunity to me.
But the flip side of that, and I'm going to take this side, not this side, but I'm just going to play devil's advocate here and everything, because the flip side of that is that some people, because you heard me mention that one of the things that they're going to visit when they come to North Carolina is a Honda plant. And some people would argue that the cars that are made in America need to stay in America, and all along those lines, that whole Make America Great kind of slogan that is out there. And all along those lines, I have no problem with Honda being here, but there are some other people that would probably be upset at the fact that Honda is in North Carolina or some of these other companies, and that may play into what they consider a debt problem. And all
it's an outdated way of thinking. It's the global environment, and get over
it. Security selection and market timing make no material contribution to returns. David Spencer has said that by the American economy as a whole, by buying an exchange-traded fund which tracks the S&P 500, and you cannot improve on that. Yes, you can by selecting the right stock, but selecting the right stock is a judgment-based decision, which is wrong much of the time. When you're buying something as a security, you're buying it from somebody who is selling it. Why is that person selling it?
As I've said, both Milan and Sasha are right. If you're talking about individual stocks and individual investing in sectors as I do, what you're basically saying is I have the intelligence and experience and the knowledge
Yeah.
to do better. And I believe that, Sasha believes that. And many people who aren't smarter and don't have the experience think that too, unfortunately for them.
But some people who have great success as investors, Warren Buffett, for example, who has had something like a 90% annual return for more than 60 years, unmatched, has decided that in his will, his wife is going to get what we're talking about here, an exchange-traded fund which tracked the S&P 500.
Yes.
Yeah.
And so his wife isn't interested in tracking it the way Warren Buffett is. And this is the thing. Most people should take the path that you're outlining, Milan, because most people don't have the time, energy, or interest in tracking their investments the way that Sasha and I do. So, this is a wise strategy, and I'm very supportive of it for the majority of people. But if you want to do better, if you want to make yourself wealthy, there is another approach, one that Sasha has outlined many times. And my approach is slightly different. And Sasha actually makes a better return than I do. But I'm pretty comfortable with what I'm doing and pretty comfortable with my results. So, there are ways to do it other than the way that Milan is suggesting. But the way that Milan is suggesting for the majority of people is wise. Now, you think
it takes no effort. It takes no effort.
And it takes no effort.
What Sasha is doing and what you're doing requires constant attention. And if you enjoy that, and many people do, by all means do it. Warren Buffett is not an investment star. He is a business star. He has bought businesses, many of which happen to be traded on the stock exchanges, so that it looks like he's picking stocks. He's not picking stocks. He's selecting businesses based on their performance and their future prospects. He is a business star, not an investment star or security.
Well, I can say the same that by buying 200 shares of NVIDIA, I'm buying business. I didn't buy shares of NVIDIA, I bought business.
True. Yeah, that's true.
That's totally how I think of it. I'm thinking about sectors and who's going to be the star of that sector, and can I identify them? And I think I can, and if I can, and my track record supports it, then that's the way I'm going to keep doing it.
You're an exceptional investor, James. You're an exceptional investor, Sasha. Doesn't apply to most people.
I agree.
Yeah.
And unfortunately, too many people think that they're brilliant at it.
Yeah.
That's correct. Yeah.
Well, Wall Street encourages them to think that, because then they trade more often, and Wall Street wins every time. Oh yeah.
Yep.
I mean, how many people are probably just doing what I call guessing in their stock investments? The three of you are brilliant and do a great job, and I definitely learned quite a bit from you. But I also talk to friends of mine that are trying to do investments, and sometimes you ask them why they're investing in whatever they're investing in, and it's kind of like the reason. And we just finished March Madness, that people pick their teams because they like the color or they like the
uniform,
or whatever the reason is, but they are totally picking by luck and all along those lines. So I'm gonna turn it back over to y'all, but I do have to tease Sasha about something that you said, Jim, because I'm wondering about those daggone wives, because I don't have one of those right now and everything. But I did hear, speaking of basketball and the whole athletic space, that one of the great coaches now, because Dan Hurley just won the Connecticut title, said that he will not be going to Kentucky because his wife told him not to, because he said he can't afford a divorce. He said he cannot afford a divorce, so since the wife likes Kentucky, he's going to stay where he's at. So he definitely said that. So I'll turn it back over to y'all to continue this investment conversation, but I just wanted to chime in with my thoughts around what Sasha had asked me.
I think a marriage is a good investment, but divorce is not.
One of my classmates visited yesterday, and he's doing very well. He's happy with the way his performance in the market is, but he is paying an advisor $30,000 a year, which he could keep himself by investing on his own, which is what we encourage people to do, because it's so easy to do well. Yeah, $30,000 a year, but he's happy with it, and that's the most important thing, to be happy with your investment.
Yes, I agree. That's the bottom line, isn't it?
Well, I think very important is that everyone will invest or not invest and enjoy whatever you're doing. This is very important. If somebody enjoys to buy S&P 500, enjoy yourself and to have a great day and be happy with your children, grandchildren, and so on. Now, those of like myself and Jim who would like to be a little bit more involved and select stocks for whatever reasons they are, let them enjoy that as well and hopefully to make money at the same time. However, it's very difficult here in this particular situation. You see, when you buy S&P 500, then it goes down to 20% or even 50%.
Sure, of course.
Doesn't matter. So everybody is losing money. Oh, you idiot! You lost $50,000 for nothing. Everyone lost $50,000, $100,000, and $5 million, and $25 million.
If you can break even and have a good time, don't ask for more. Break even and have a good time. Yeah.
Exactly. So even if you're losing, you can get that. Now, in situation with myself and Jim, it doesn't work that way. If we are losing here 50,000 or whatever, we cannot rely on the fact that there are many other investors in the same stock. They also lost money. It's very, very weak afterthought and argument. It's very weak. You have to be in the green. You have to enjoy myself. For example, like with NVIDIA, with this 200 shares, I'm not in the green right now, but my covered calls are in a green. So whatever I'm losing, it's not one per one, mind you. Let me be truthful about it. Let's see, if I'm losing $10,000 on this 200 shares, I'm making about $8,000 on covered calls. So I'm still losing $2,000. But because my profit will be anyway in options, not in stock, because I sold the December 8th, 960 calls. So I will not defend this. It will be taken away from me for 960. So I will make a little bit of money on the calls because I bought shares cheaper than that. However, there will be a great opportunity for me on the option side because
What's the expiry date on your covered call, Sasha? When you sell covered calls, what's the expiry date? How far away?
December 20th, 2024.
Oh wow, yeah. Now, don't you find that the closer the expiry date to the date that you place your order, the greater the percentage return? That is, if on a Monday you write your cover calls, expiry date Friday of the same week.
I know that, but I'm playing dollars, not percentages. I don't care about percentages. I'm talking about real dollars, which will stay on my account.
If I understand correctly, by putting it into December, you're getting bigger premium.
Yeah, bigger premium, but
much bigger.
Much bigger.
It's not even you can't even compare what you're.
The premium is bigger, but the percentage premium is smaller. The greatest percentage premium you get.
I care about dollars, not percentages. I really don't.
You mean there's a difference?
Yes, huge difference. Because if you're selling the closer expiration call, and NVIDIA is very volatile stock and it moves in the wrong direction, you have to deliver your stock, unfortunately, or you have to repurchase the calls at much higher price and then sell other calls. And on these transactions, very often, if even eventually you're right, but on the transactional side, you're still losing money.
It's a complicated subject.
It's complicated. Let's discuss it next week.
Okay.
In the meantime, I would like
and you're both right.
Yes. Thank you so much for today's program. Have a great, successful.
Thank you. Thanks for having me.
Bye-bye, everybody.
Bye, Milan.